I can demonstrate a software that I'm using as well that my mentor showed me many years ago.
Good afternoon, everybody, and welcome to today's show. It is your Tuesday edition, and we got a lot to discuss today. I am your host, Josh Lilquist, and I have a special guest with me today, Mr. Jeff Manson. Jeff, how you doing today?
Hey, doing great, doing great.
It's good to have you on the show. It's been, 2 days since I've seen you? How's the weather over there in Arizona?
A lot warmer than it is out there in Minneapolis.
Yeah, well, actually, we do have about 80 degrees here today, so I am enjoying that, and I'm going to take some time outside, potentially go golfing later. I got a tee time, but I don't know if I'm going to make it or not.
Nice. Got to get out there and enjoy it when you can.
You're right, especially over here. Well, I'm glad you came on the show here today, Jeff. We got a lot to discuss here, and we've had a lot of questions about the financial markets, how they work, what is happening with really all the volatility that's going on. And first off, I want to start out with how you started trading and investing. There's a lot of people that want to learn how to get started, or some of the first things that they can do to get started in the financial markets. How did you start?
Well, way back in the day, I was working in a box factory and I started looking around at all the other, and I was a factory worker, so I never really had any formal training other than what I've learned on my own through books and tapes and going to classes, courses, and things like that, and a strong desire to change the way I was doing things. I mean, a lot of those old guys that I was working with when I was a young guy, they were in that business for like 30 years. And I'm going, these guys get 2 weeks of vacation a year and they don't go anywhere. And this is not the life I wanted to be tied to. So, I'm pretty much homegrown. I'm very much like the novice traders out there. That's how I got my start. You get your feet wet, you start researching, you start looking into who can teach you how to trade well, who can be there and actually show you a live trade while it's happening, and not just making stuff up. So
Sure.
again, I got my start mainly just by this strong desire to learn how to make more money.
Got it. Just kind of jumped into it. And that's what, some people are afraid to do, is actually get started. That's the hardest thing for a lot of people, is to start something, especially if it's new. And that's pretty cool. You just kind of dove in head first and started to learn, probably learned the School of Hard Knocks, wasn't
I didn't even know how to use a computer.
it?
And, back in the day, I mean, we had a 14.4 baud rate, and then it jumped up to 56. We thought we were really smoking,
Yeah.
So I didn't know how to type. I mean, I was just learning charts and patterns. That's where I got it.
Got it. Before we get into today's topic, we're going to talk a lot about the Fibonacci, some of the different odds and enhancers that you use. Can you just dissect for our viewers and listeners on YouTube and also the podcast, what's happening right now? We're seeing with the election coming up, there's quite a bit of volatility, and you've been talking a lot, kind of about a bigger picture a lot on the financial markets. Just dissect what's going on in these financial markets.
Well, it is my opinion, and I'm seeing this start to manifest out. Since last October, I started talking about what we call as a melt-up phase. And during the melt-up phase, there are some extreme strong moves, okay? And every market since the 1510 to be exact, the first one that had the melt-up phase, those markets doubled in size in a short period of time. We're talking about 18 to 24 months, okay? And right now, we've gotten one of our small pullbacks. During the last melt-up phase in the Y2K boom, internet bubble, and things like that, the markets doubled in size at that point. But we also had 5 corrected moves during that melt-up phase as it started out, before it went parabolic. 5 corrective phases where the market dropped anywhere from 9 to 13%. So when you average all those out, about a 10% drop is where you got to start looking for your zones, looking for an area to get in, and start going in lightly. And then once the trend starts to establish again, is to start playing into that move. So just in the last, just yesterday, we made that final drop, and we got just a little bit over 10% drop in the equity markets. I'm referring to the S&P futures. Okay. Which then lit up that, hey, this is a time to start looking for us to go back in. Now, it may be a strong move back up, but the last couple of days, it's only been kind of, get a bounce, and it's kind of been mediocre going sideways. Okay.
Mm-hmm.
There's always risk when you're trying to pick that low point. And he's mentioned Fibonacci retracements and extensions, and there was Fibonacci levels that came into play. There was support and resistance. There was supply and demand. There were trend lines, and there was a whole bunch of different conventional technical analysis and some more advanced technical analysis that were coming into the market at that price point. And it just made it an incredible buying opportunity to start coming back into the market and going long. And the folks that have been holding on to this down move, they're just still crying the blues. They're like, they're just waiting for it to get back up to break even, and then they'll probably try to get out of the market to, just feel better again.
Yeah, who knows? Yeah, that's the thing. I mean, there's some uncertainty right now as well. And I mean, a lot of people that are those buy and holders, I mean, they're still, kind of shaking their boots, but understanding that there's other strategies and odds enhancers, like you mentioned, there's, support and resistance, there's supply and demand, there's Fibonacci, and you're a big advocate for supply and demand, but you utilize that really in all markets, right? And you do
Yep,
you utilize the Fibonacci in all markets as well?
I do. And pretty much, we become very sensitive to patterns and shapes in the marketplace. And with those patterns and shapes, it really helps us visualize and see that these patterns tend to repeat themselves over and over again. And the measurements help me confirm that it is the pattern that I'm looking at. Because sometimes it looks close, but taking the actual measurement of it and putting it out there really solidifies that picture.
Okay. Now, as far as do you do a lot of tweeting and stuff? If you want, you can share your screen and go over a couple things if you'd like to. But just
Yeah.
before we do that, explain what the Fibonacci tool really is, and then if you do have questions, feel free to type them in the chat. Also, anything that you like that he's saying, make sure to give a thumbs up on that as we're going through the show here today. And we'll try to answer any viewer question as well. So, what is the Fibonacci? And if you want to explain that on a chart, feel free to share your screen.
Okay. Yeah. Fibonacci measurements, it's really like a measuring tape to confirm a picture on a price chart. Okay. There are specific Fibonacci retracements and extensions that we use in combination together that help us see that picture a little bit more clearly. Okay. Now, I don't have time to get into a whole in-depth analysis of the Fibonacci measurements and things like that to start showing structures and patterns, but I will show you a couple of them.
Okay.
Okay. So here's an example. This is where my Twitter feed, if anybody wants to follow me on Twitter and see these little daily updates. Monday, the S&P finally made a 10% correction right at the 88.6% retrenchment. Okay. So where we have this picture where we have a drop and then price base sideways and a strong move up, the pullback, buying on the dip, once price comes back down to that area, we need to know where the dip has a very high potential to change direction. Okay. So the picture on the price chart up in the corner here is, I call this, we have like drop, then price bases, and then it rallies out. Okay. Now there's a couple different places you can play this. If you have information on the left-hand side of the chart, you can still continue to play it, or you can wait for price to come back down to this area, the origin of that strong move up. So a small template here where we anticipate that. Now, Fibonacci measurements, after I qualify a qualified zone, I take my measuring tape, my Fibonacci tool, and I go from the distal line up to the rally. And what I look for is a percentage retrenchment back down when we're looking at the beginning of an impulse wave. And that first retrenchment that I teach a lot of students to train their eyes is an 88.6% retrenchment. Okay. Let me just change this to percentage retracements rather than just showing you the price.
Sure.
Okay. So I first qualify a zone, which I call a demand zone. I look at the pattern and then I anticipate if and when price comes back down to this area, then I will. What my expectations are to the right side of the chart is once it hits here, then I'm looking for this move up.
Mm-hmm.
Now the 88.6 is the most common retracement, and I'm on the S&P. But if you go back on the Dow, you can go all the way back to the early 1900s, and it still plays out.
Mm-hmm.
Okay. One thing I would like to put out there for your viewers, though, is looking at this S&P futures market right now. This is when the stimulus package came in. $2.2 trillion came into the market to pump up the economy. It just so happened that it pumped that $2.2 trillion that came into the market, pumped the S&P up 1,363 points.
Mm-hmm.
We are soon, depending on when it comes in, we don't know when exactly till that political football gets done. Okay. But if $2.2 trillion did this, what is $3 trillion going to do?
Yeah, who knows? I
Okay.
mean, it's kind of
Well,
it looks almost obvious, doesn't it?
it is quite obvious, when you start looking at it. I mean, if we're looking for another 1,300 points back to the upside, that's going to put us up around 4,500 on the S&P.
Mm-hmm.
Now, the reason that I'm putting this out there is that when I've got these little retrenchment, these little patterns here, each one of these patterns was the beginning of a new move to the upside. Okay. There were specific retrenchments back down. And as I go back in history, I see that every time we got those little retrenchment areas back into a specific Fibonacci measurement, okay, and somebody's going, well, what's a 70.7? Well, it's a square root of the 0.618, one of the square roots. So is the 88.6, okay? But each time we've had these throughout history, we've had significant moves to the upside, okay? So even on the Dow, going back in history, you'll see this all the way back into the early 1900s. We have this drop, we base, we rally, and then we come back and retest the area. We
Mm-hmm.
drop, we base, we rally. It's the same pattern over and over again. So seeing this and then calculating it, you say that's great for a history lesson, but what's going to happen now? Well, all things being equal, we dropped, we based, we rallied, and now we're back down to the origin of that rally. Okay. At this point, are you willing to take some risk and get into that trade? What is that picture going to look like? Now on my price chart, I'm also these areas up here are let me open this up here just so the viewers can see it. The Fibonacci measurements work both up and down. Okay.
Okay.
So once I have a confirmed turning point, is I'm looking for right now this move up here to the 88.6, and I have this one right here that I need to get past first. Once the S&P clears this 3420, 3430 area, we're going to start to see everybody's now going to recognize we're in an uptrend, but they missed the turn.
Sure.
Now we called the turn. I've been publishing this for almost 60 days now. This whole up move, and there's each of the impulse waves that we have were followed by a corrective wave, and so many of those impulse waves came into play, and then we finally had that a bigger correction, 10% drop, okay, back into a zone where we were anticipating price to change direction. Okay, at this point, I started loading up on some more trades. I did the same thing this morning. I'll come back to these charts and explain to you. Is this morning we were looking for that opportunity to get in and go long. So one of the first trades that I took was right off of this area here. Okay. The price pattern and the Fibonacci measurements work on any time. This is a 15-minute chart. Okay. So I have the drop to base, and then I had base to rally, and then price came back down. As I take my Fibonacci measuring tape and go from the distal up to the rally, we can verify, was that one of those retracement areas where price came up? Bam. Okay.
Mm-hmm.
So what I do is I isolate a little area, use a specific group of candles to help me manage my risk. And I'm willing to take the trade going long or going short if and when price comes down here. The Fibonacci measuring tape just gives me a reference point.
Yeah.
And with this this particular price structure, price came right back down to the area. As I visualize the right side of the chart, often this AB leg becomes the CD leg right off of that turn point. Okay. And up at this point, I would expect a little bit bigger correction where price would come back down and then it would resume its trend going up. Okay. So the first area, the retracement, has about 3 more swings to the right side of the chart that are very predictable and very specific price patterns where the geometry works really well. The real fun part about this is that I can use a Fibonacci time extension and go from the base to the retest. And I can look for in price and time when I expect that change in trend. Now, this gets real fascinating when I demonstrate in a live market.
Mm-hmm.
It's really fun to participate in.
Yeah, and that's pretty cool too. You mentioned earlier about the history lesson. You can go back in time and see that, and that's the thing that you can tell that you've done. You've actually back tested this because we all know this. This you mentioned the melt up phase. I mean, the market may not do this, but there's always opportunities to understand different strategies and techniques, no matter which
Hmm.
way it goes. And with the proper risk management, you said, "Are you willing to risk some capital on this?" Well, if
Right.
you have a risk, you have a reward target, and you have your protection, your stop loss. Well, if you have a strategy, just let the strategy work out because it looks like you've tested this over a long period of time. I think you said back in what, over 100 years, was it?
Well, I haven't been around 100 years, but
Oh, you sure?
only halfway there.
Got it. Got it. Hey, I was thinking you're about 40, so I don't know. No, but that's the key is to have that proper strategy, no matter which way this market goes, so you can take advantage of opportunities because the market is going to do whatever it's going to do. But if you do put that low risk, high reward, high probability entry points into the market, well, that's the difference. Now, if you do have questions for Jeff, feel free to jump in here. Emir says he's been following Jeff Manson for nearly 7 years. Most awesome instructor and trader. So that's a kudos to you, Jeff.
Well, thank you.
I don't, you may know him. I'm not sure, but the do you have no? You use this with futures. You've been talking about here. Obviously, the equities market. Do you use that in the currency market too?
Oh, even more so. Currencies, Forex market, futures, it all has the same rhythm. It all has the same price patterns. And um, training your eyes to find the right place, to get in at the right area, to reduce the risk is really important.
Mm-hmm.
One of the software that I use, which my mentor put together, his name was Skip Igley. Skip put this as a trend following indicator. So this is not a reversal like getting the drop back into a demand zone or rally into a supply zone. This is all software designed where I have, I'll just open this one up here because there are some very specific techniques that are used in this, okay, that are quite fascinating. And I've always been kind of that history buff. I'm reloading the chart up here.
Mm-hmm.
Um, and using some of the tools that are available out there because technology has changed.
Yeah.
Now here I have you can see the cyan blue colors going out. That is a forecast tool. Okay. And that forecast tool is based on a technique called atom reflection. Now, way down at the bottom, we have the market trend. And now, when the market trend is blue, that's a strong market trend for um, going long. Then I have a main trend and a mid trend, which are indicated in colors. There's a lot of technology that's in this as well. And then we have our trend strength indicator. So when everything turns what we call level 5 blue, that's the opportunity to take the trade and manage the risk. Okay. And here we just had our last little move right here where everything went level 5. We can get into it and we can still see that the projected move is going higher. Once that projected move starts to reverse, we have time to get out of that trade. And you know, I'm not a really big fan of having a lot of technical indicators on my chart, but in this simple five colors, um, I've got 32 indicators that are working right there, and it's just telling me to stay with the trend. There's nothing wrong. It also alerts me that when we have these little pullbacks, it'll tell me when these dots start going sideways that the strength is changing.
Got it.
Okay. When it drops down here, if there's no red dots that paint on top of it, then this is just profit taking. And until I start seeing the red dots, then I start need to be concerned.
Yeah.
Okay. So it's cool stuff. I mean, there's a lot of different technology that's out there today, and it's just absolutely fascinating.
Yeah. No, I just want to reiterate something that you said. You've been in the market for many, many years, and you had a mentor, and probably still mentors you through your decisions and stuff once in a while, but just with other information and techniques and concepts. And that's important because trading and investing can be a lonely business, but if you have a group of, mentors or a community behind you, it can be a different ball game that way. So that's pretty cool. You still mentioned that your mentor and how you got started, and do you still talk to that person?
Well, it's funny you mentioned that because when it was almost 26 years, no, 24 years since I last spoke with him. And during the COVID thing, I go, you know what? Are you guys still selling your entry point software? He goes, no, it's been sitting on the shelf for 9 years because he does a lot of other things. He's a Harvard professor. He's also a captain. He's of airlines, and I mean he does so many different things. And
Hmm.
I said, well, during this time of market, people need to know to stay in trades longer. And there's so much misinformation out there. Uh, can I get the software again and start evaluating it? So for the last 4 months, I've been evaluating this, and just so happens today we're getting a nice little trend behind it. And if you notice these little dots that are following behind it, these are in essence a form of a trailing stop.
Okay.
Okay. So I only use the one that's complete. So the bar that's forming up here is not yet complete. So my stop is right there at 32.93,
Hmm.
allowing me to manage my risk. Now that one's complete, I can bring it right up to this area.
Hmm.
And somebody that can just follow colors can stick with this.
There you go.
The other part that is really fascinating is that he's done these data analytics on this. And what this platform does is, here's my weekly charts, is it scans all of it. So if I have a brand new weekly trend starting, it says, oh, okay, here it is. So the weekly chart, and we'll go back in history and say, well, these ones trended for a whole year. Okay, here's another one just setting up. Is this one going to trend for a year? Well, I don't know that yet. Well, remains to be seen.
Yep.
But this has saved me so much time in looking for candidates, and I can see based on the data analytics how long it's been trending, and then it just formed a new setup bar. So cut my research time down. As I got into the smaller time frames, I now make sure that the weekly is in an uptrend, okay, and the daily is in an uptrend. And right now we got a lot of mixed markets, which is causing everybody's trend to be questioned. Okay, so what I look for is a weekly level 5, a daily level 5, and then I look for little pullbacks on a small time frame back into a setup bar to go long.
Got it. Got it. So you use this tool for multiple different things then. So, I mean, you've dropped a lot of knowledge on everybody with Fibonacci, kind of a, not a, I guess kind of a forecast of the market. I mean, it's not guaranteed. There is risk in trading. So people have to make their own decisions. So do you, before we kind of end the show here today, do you have any special projects that you're working on right now or anything that you've done with your time off over the last couple of 6 months or so?
Well, I really want to get the message out there that people that are looking for a very specific, if they're looking to learn to trade the markets, is get into a reputable school, a reputable place that's going to help them and it's going to support them. You mentioned the community. I didn't survive long periods of time without being around other traders.
Mm-hmm.
Okay, it was very difficult market condition for me
Yep.
because I wasn't around other traders and sharing ideas. Get the education. We have just had the second 10% pullback. We got three more going on the way up. This market starts going parabolic. We're looking for the S&P to double in size, and that was from the 3,000. So we're looking, and I'll make a bold claim, within the next 24 months, we're going to see the S&P near 6,000. Every
That's a big
market,
jump there, Jeff.
every market since the 1510 that has had this melt up phase has doubled in size.
Mm-hmm.
The last one you can witness was 1991 on the Dow. Dow was at 5,000. At the high of the 2000 Y2K, it was at 11,000. It over doubled in price. And you don't want to be trying to learn these markets or learn how to trade, execute orders, and things like that when the market is so heated up. You want to give yourself a little bit of time to learn. You want to have some community and tools that you can push yourself as fast as you can to gather this information.
Sure.
And that's really my mission right there, is traders helping traders. That's what my mission's always been, is trying to educate and help people out. And Zig Ziglar, my one of my mentors, my other ones, okay, was you help enough people get what they want, you'll get what you want in return. So it's all about paying it forward and helping each other.
You're exactly right. If you want to unshare your screen, Jeff, that'd be great.
Sure.
But I appreciate you coming on the show, and just want to make sure, with what's happening in these markets, it could go up, it could go down. Just be protected in there. Make your own decisions. Have proper risk management, because we all know we make our own decisions. You have to manage your capital the right way, and just understand to do that properly. Thanks for coming on the show, Jeff. Make sure to give a like to the show here today. Subscribe to the YouTube channel here. Jeff, you have a Twitter handle. It's what is it? It's at JMANS1111. So if you want to follow Jeff on Twitter, that'd be great. You can follow myself as well on Twitter at Josh Lilquist. Appreciate you coming on the show here today, and hopefully we'll have you again. I seen you this past weekend. I would like to have you back here in Minneapolis again, and we'll do some chatting about the financial markets.
Happy to do it. Just let me know a day ahead of time, and I'll be happy to come on and share some more things with you.
Great. Thanks, Jeff.